Welcome back to the channel. My name is Stephen Nguyen. I'm a pharmacist and I own 52 units of real estate. So today I want to talk about insurance. So for those of you who've been following my channel, you know I'm really big on replacement cost insurance. And replacement cost insurance is typically more expensive and it's RCV, right? So when you get your insurance quote, whether it's for single family or multifamily, you want to see if they're quoting you RCV, which is replacement cost, versus ACV, which is actual cash value. So those are the acronyms. So let me break down the difference between the two and first talk about replacement cost insurance. So basically, replacement cost insurance is what it costs to replace your damaged or stolen property regardless of depreciation. So for example, I bought my 26 unit apartment complex for $500,000 and I put in $300,000 worth of renovation. So technically I'm all in for $800,000. But if this apartment were to burn down to the ground and to build a brand new 26 unit A-class apartment complex to 2024 standards, it's going to cost roughly about $3.3 million, right? And every year, the cost to rebuild it goes up and up every year, right? Because labor gets more expensive, materials gets more expensive, and it appreciates over time. So basically, this is a good safety net to have, right? Like it's obviously nice if the apartment burned down, you can rebuild a brand new one to 2024 standards and get about $3.3 million to do so, right? So basically, the insurer will pay the cost to replace the whole apartment complex. You just pay your deductible, right? So it sounds nice. And I was really big on replacement cost insurance, but my 26 unit apartment complex, the insurance has been going up by about $5,000 every year, right? So, for example, the first year, I think the last owner he had actual cash value, and it costed him about $5,000. And I bought replacement cost insurance, which was about $20,000 year one, $25,000 year two, and year three I just got a quote for $30,000. So now this kind of got me to reassess. Okay, is it worth it to get replacement cost insurance, given that interest rates, or given that it's getting more expensive, right? Um, is it worth it, right? So for me, I was scared at first, so I thought it was worth it, right? Like it's peace of mind knowing that if it burned down, I can repair it, and it costs more, obviously, right? More money from insurance, it costs more on an annual basis. Versus actual cash value is the amount to replace your damaged or stolen property minus depreciation at the time of the loss. So, for example, if you had a $100 million property, let's say you got $1 million actual cash value, at that point you would depreciate it, and then whatever is left over, the insurance would depreciate whatever's left over is what they pay you out, right? So, for example, if let's say your apartment was destroyed, they would basically reimburse you the cost of the apartment minus the depreciation based on the age and the condition of the property, right? Which is determined by insurance. And ACV, or actual cash value, is typically more affordable, but the coverage may not be sufficient if if your apartment were to burn down, right? So now the question is how to pick what, right? And remember, I've always been on the replacement cost, right? But for this cycle, I'm actually getting quotes for actual cost insurance, or ACV. And for context, like for example, the insurance does require minimum amount of insurance, so I need to look into what that is. But typically, it's going to be less robust than replacement cost insurance. So for today, 2024, my 26 unit, the replacement cost insurance is about $3.3 million. The loan on the property is roughly around, I think, 350K, and I'm all in for about $800,000. So in my mind, what would make the most sense is getting an ACV policy about $800,000 to $1 million. And basically, what happens is if the property burns down, basically, I just want to be able to get the initial money that I put into the deal and then pay off the loan, the lender, right? The lender just cares about getting their money back. That's all they care, right? But then if a catastrophic fire happened, then I wouldn't have enough money to basically rebuild the apartment. So I'd get my money back that I put in, pay off the lender, and then basically have a piece of dirt that I can sell. That's basically it, right? So basically, the questions you have to ask yourself is, in the event of a total loss, would you want to rebuild the property, or do you want to just clean up the land and sell it and move on to another opportunity, right? So um, if the answer is, you know what, if in a total loss it burned down, you just want to clean up the land and sell it, then you probably don't need replacement cost insurance, right? You're paying more upfront, and typically it goes up more and more every year, and it cuts into your cash flow, right? If your insurance increases by like $6,000 a year, divide that by 12, and that cuts into $500 a month in cash flow, right? Um, versus if, let's just say, well, why speak in terms of, total loss versus partial loss, right? So basically, it's hard, like realistically, if the apartment were to catch on fire, the whole thing may not be destroyed, right? Like maybe there'll be partial left. Um, so it's kind of like, I like to look at these extreme examples. So now let's look into actual cost insurance. So basically, actual cost insurance is, let's just say I don't want to rebuild it. It burns to the ground. I just pay off my lender. I get my money back, clean up the land, and sell it. Right? Replacement cost insurance means that, you know what? I like the area. I like the location. And if it did burn down, I'll rebuild another apartment complex that's brand new. Right? So you have to ask yourself, is it worth it? Right? So for me, I'm getting quotes for actual cost insurance to see if it's worth it or not. Given that replacement cost is so high right now, and like you said, I just want to see the price difference. If it's like significantly cheaper, like let's just say replacement cost insurance is $30,000 a year, versus if I get actual cost at $10,000, that's $20,000 in savings and $20,000 in more cash flow that I would get, right? But it's riskier, right? If it were to burn down, I may not get all my money back to rebuild my 26 unit apartment complex, right? So these are things to consider as you buy multifamily. Like for me, I kind of went ham and really intense on insurance, but there's ways to lower your insurance costs, right? So you can get a higher deductible, right? If you have $1,000 deductible versus a 5,000 versus a 10,000, typically the $10,000 deductible is going to have a cheaper annual rate, but when you need to use it, it's going to be more expensive. If you want like loss of rent coverage for like 12 months or 6 months, so let's just say you get $10,000 a month in rent, and if your apartment were to burn down and you paid for 12 months of rental income, you get $10,000 a month in rental income while you're rebuilding your apartment complex, right? So you can factor that in. Do you want that or not, right? And you can get price quotes for all the above. And next thing is, do you want replacement cost versus actual cost insurance? And for my 26 unit, I got all the bells and whistles, right? I got replacement costs, I got 12 months of lost income, and $1,000 deductible, right? So now I'm trying to tweak that a little bit to see if I can save money, right? Can I increase my deductible to 5,000, 10,000? How much would that save me? Can I not have income coming in if it burns down in a total loss? Can I not do replacement cost insurance? Like, these are the things that I want to weigh, right? And in my mind now, if my 26 unit apartment complex burned to the ground, I probably would want to rebuild it. So it does make sense to make that replacement cost insurance, but right now insurance is really high, so I might consider going to actual cost. For my 20 unit, if it burned down to the ground, I'm not sure if I want to rebuild it. Maybe I'll just take the money and go somewhere else, right? So that's what I mean by location is very important. So you have to think about what you do, and you want to get quotes for both, right? To stay informed. I always preach you want to get at least 3 quotes. One I do online at nreig.com, and I reach out to 2 brokers to shop around, right? And I typically will tweak my quotes. So now what I'm doing is I want replacement cost a quote and an actual cost quote, right? Because right now insurance is so high, maybe I'll skimp on insurance a little bit, but when insurance is cheaper, if ever does, then maybe I'll go back to replacement costs. But if I were to pick, I'd do replacement costs on 26 unit, and I would do actual cost on my 20 unit to then save some money. So let me know what your thoughts are about replacement cost insurance versus actual cost insurance. I'm curious to hear your opinion of what insurance I should get. I'm curious to know what type of insurance you buy, right? Most people, like you said, most quotes are actual cost or actual cash value, right? Because it's cheaper to get. Those are the quotes they typically give you. So I want to see if I can save significantly. I'm thinking I don't have my quotes back yet. I'm happy to update video once I get my quotes. But right now I pay about 15,000 for my 20 unit, and I pay 30,000 for my 26 unit. That's $45,000 a year in just insurance, right? If I can somehow reduce that to maybe $20,000 total or $25,000, that saves me $20,000 a year, which is $20,000 of more cash flow in my pocket, right? So if you divide that by 12, um, that's another almost $2,000 a month in cash flow, which I'm losing, right? And if you factor in too, like if I'm lowering my net operating income by $20,000 a year and you divide that by 10 cap for simplicity, I'm basically leaving $200,000 of value on the table because I'm overspending for insurance, right? So insurance is like a fine line. I felt like at first I was really cheap and I went really expensive, right? And I went expensive because I was new to apartments. I was renovating apartments, so there's more risk. I'm more fearful. But now that I've owned it for 3 years, I'm not as fearful. So maybe I'm gonna go in the middle, right? Maybe I'll do a decent actual cost cash value policy and get some rental income protection, right? Something in the middle, right? I went way cheap and I went way expensive, so now I want to go somewhere in the middle if it makes sense. Now, don't get me wrong, if actual cost and replacement cost is not that much of a difference, I'd rather go replacement costs, right? So that's why you want multiple quotes so you can make an informed decision so that I'm not losing $20,000 in net operating income a year, which attributes to $200,000 in value, right? And remember, both the owners that I bought these from, their insurance was under $5,000 each because they probably got an ACV that was like under half a million, right? So if I did that, it got super cheap insurance. I mean, geez, I would save $35,000 a month, which is like $3,000 a month in cash flow, right? So something I'm considering. So we'll post an update once I get my quotes back. So let me know if you have any comments or questions. Please, love to hear insights on this. Like, comment, subscribe, and hope to see you next one. If you want to learn to buy multifamily, check out the link down below. Thank you so much.